Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really happy to have our most favorite guest, Michael Oliver, with me today. Michael graciously shares his insights with us on the show, but if you really want to take advantage of all that he has to offer, all his insights and trading ways to help you improve your trading and your investing, I would suggest you go to olivermsa.com to sign up for his very reasonably priced Momentum and Structural Analysis newsletter. It's one of those letters that I don't think I could do without for sure. So I'm really highly recommending that you consider doing that. I want to tell you that you can buy Michael's book, which he's also we wrote quite a while ago. He says when he was just a kid. Actually, it's titled Anarcho-Capitalism: The New Libertarianism, and I might, if time permits, pick up a quote from that book as we talk here, because it sort of works into the theme of what I want to ask Michael about today. I should mention that although this is the last time that Turning Hard Times into Good Times will be aired on the Voice America Business Channel, Michael has agreed to join me every other week when this show will be aired on the podcast page at jtaylormedia.com and also on J Taylor Media YouTube channel. Welcome, Michael, and thank you so much for joining us again.
Good to be back, Jay.
Always good to have you with me. We had you on a couple of weeks ago, so I don't know, maybe this is asking you again what your views are as we go forward with the global economy, financial markets. What are your thoughts now?
A silly remembrance of a scene from a Monty Python movie. I think it was The Holy Grail. There's two guys, a medieval movie, okay? Envision this. There's two guards standing outside of a castle, and they've got their giant spears in front of them upright, just to guard the castle gate. And one of them looks off in the distance, a mile away, and he sees two knights on horseback. And the knights have lances, they're like they're coming for the castle. But they're miles away. And so the guy sort of smiles to his other guard, and they snicker, because these guys are so far away. And then they look at him again in a minute, and they're still way, way far away. And then within a second, they turn around, and the knights are upon them and impale them with the lances. It was all of a sudden, they're distance, boom, they're there. Mm-hmm. Call that chaos theory, where, we move incrementally, trends do. And quite often they persist incrementally, from the beginning of a bull trend to the end of a bull trend or a bear trend. Mm-hmm. I think 2023 is going to be a chaos year, where that which is underway will be more rapidly underway in 2023. Suddenly, like somebody upsets the table, flips the cards upside down. Okay, that's the mental image I'll leave you with. You can almost throw the dart at any market I'm talking about, where that type of outcome could occur. Especially, I would say, with gold and silver upside. I think the events that are cooking out there, that are all interconnected, although a lot of the financial TV channels don't make the interconnectivity. These fracturings that are going on are going to create wave effects that affect average people in the street. They're going to affect politics. Politics is going to affect them, vice versa. Certain markets are going to move in ways that people don't expect, or further in the direction they don't expect, and more quickly. So I think it's going to be one heck of a year.
Yeah. Well, I would think, and that image that you just gave us of those guys off in a distance and no need to worry seems to be kind of the way that people are taking the equity market now. They think probably the worst of it is behind us. A lot of people are thinking that, hoping that, expecting some sort of a soft landing by the Fed will just usher us, will just take right off and off to never land where things are always wonderful. Equity markets, I don't think you're well, let's start with inflation and interest rates. I mean, what are your thoughts there? Because they, obviously, if inflation.
The T-bond, the U.S. Let's talk U.S. government long-term end of the U.S. government bond market, the end that the Fed has least control over. 20, 30 years type stuff. ETF would be TLT, or look at 30-year T-bonds. They actually were in a downtrend on long-term momentum well before. stocks ever turned down. They were in a downtrend back in late during 2021 anyway, various times depending on the one I was looking at. And the stock market didn't engage to the downside until early 2022 by our metrics. Of course, by most people's metrics, it didn't engage till last summer. But so the bonds were headed in being cratered. In fact, they had like a 35% down year last year, whereas the S&P had a 20% down year. NASDAQ had a 30-something% down year. So the balanced portfolio concepts, stupid notions, 60-40, 60% stocks, 40% bonds will keep you balanced. Well, it submerged you on both sides. There was no help on either end. The only asset out there that might be listed in some people's orthodox portfolios would be gold, and gold was unchanged on the year. Silver up 3%. So the Fed fighting inflation thing is it's going to be really fun because a lot of people are cheering the downticks in gasoline prices. As a conspicuous factor. And yeah, I agree. We thought that months ago. We said, okay, we get bullish on oil, by the way, at $40 back in 2020, and natural gas just above $2. But then everybody joined in, and it was the leader of the first upwave in commodities. That first wave began in October 2020, way before Russia ever invaded Ukraine. In fact, if you look at the oil price chart, it peaked like weeks after the invasion. So there was, the entire advance in oil had already occurred before the border had been crossed. So people the governments especially like to blame the inflation on these sort of extraordinary factors. Well, the real factor is central banks, monetary expansion, free money. Okay. Okay, now they've seen a downticks in some of their inflation metrics, and we've seen it in gasoline. So a lot of people think, oh, the Fed's sort of doing their job, right? Well, watch the Bloomberg Commodity Index. It just made a low, I think may have been its pullback low, at 107 and change. And last year, by the way, despite being in correction mode, the Bloomberg Commodity Index still had a 13% up year. Okay, so the Fed didn't fight Bloomberg too much. But anyway, it was 107 and change. We're now trading over 112. It's like 6, 7, 8 days later. Okay, that's a 4.6% gain. You go up another couple points in the Bloomberg, and it's going to re-engage to the upside, we think. But I think this time around, the leaders are going to be food. More likely going to be food, and energy will be a laggard upside indicator. So everybody's got their eyeballs on crude oil and natural gas and feeling better. They're not looking at sugar making new multi-year highs, or cattle making new multi-year highs, or corn and beans reasserting themselves. So I think that's where you got to look. And when that comes back, all the talk, the potential talk of, oh, the Fed's they're going to back off a bit because inflation's cooled. What if the Bloomberg engages in a second up leg and it's demonstrable? What will that do to those people who think, oh my gosh, the Fed's going to do more? Okay, so what are they going to do with their stocks? They're going to, probably be even more frightened. So anyway, I'm expecting a second wave up in the commodity category. Now the gold and silver don't depend on that. A lot of people think, well, if commodities are up, gold should be up. Well, actually, it's not the case. Gold's in its own world. Gold doubled between 2015 low and the 2020 high, while the Bloomberg Commodity Index went down all during that time. So gold didn't need commodities. And then when commodities had their explosion, starting in late 2020 to early 2022, gold was going sideways. So the correlation isn't real good. But gold and silver look like they're ready to re-engage in a big way. They've crossed virtually every hurdle that we can lay down in front of them. They've crossed it. So we're highly positive on gold and silver, with silver being the leader. And we think that's going to be the stellar place to be this year, rather. Yeah.
Well, I wonder, Michael, silver does have more demand coming out of the, as an industrial metal, whereas gold is purely a monetary metal. Silver serves both functions. It has been lagging in the last couple of weeks. Of course, I know you take a longer-term view of things. Gold seems, it's less volatile, isn't it? Gold goes down less when we're in a bear market, goes up less when we're in a bull market. So I guess if what you're talking about, if we start to see the whole commodity complex start to rise again, and gold goes up with that, silver is likely to outperform gold. And I would guess silver stocks, too, perhaps outperform gold stocks.
Yes. That would be our bias, yes, and that's my personal outlook, and period. I've never been so excited about a potential move as this one.
As the silver move.
Mm-hmm.
And I should say, folks, that in Michael's letter, he does tell people what he's doing. So he's putting his money where his mouth is, at least in extreme cases. And I've noticed that, Michael. So I do pay attention to that. I think all your subscribers probably do. Okay. So we've seen a lag in the gold and silver shares recently, from the metals. What any thoughts about that?
Well, yeah, actually, it's a lag in the sense that gold is sort of, pushing back near its highs, and silver's well up past the midpoint of its range of the last few years. Whereas you look at the gold miners, and they're nowhere near their highs of the last couple of years. But actually, on a percentage basis, measuring from the recent lows of the summer, so find the summer low in some of the GDX, for example.
Yeah.
Find the summer low even in an anemic large cap gold stock like a Barrick Gold, which is relatively anemic versus the sector. And you've had moves of 50% variety. Mm-hmm. Gold has had an 18% advance from its low. So on a percentage basis, the rally from the summer low has been far greater in the miners than it has in gold. But that's because they're catching up. In other words, they also had a far greater decline from the 2021 peaks down to the 2022 lows. So they're a wild child, and they swing bigger. Now, they're not as close to the old highs, but on the other hand, their recent several-month move has been far greater in the miners on a percentage basis.
All right,
and I think that will persist.
All right. Just one question on the commodities. Food, you think, is going to be the place to go. Are there any ways people can play that? I guess the commodity ETFs. There's an ETF called DBA, and I'm not sure. I can't attest to its ability to match what I'm seeing in the specific commodities, the specific food commodities. There are ETFs basically for almost every single food commodity out there. There's a sugar ETF thing called cane or something. There's a soybean ETF, corn ETF, and so forth. And so there's direct ETFs to participate in that are futures-based ETFs, just like SLV is a silver bullion-based ETF. Right.
So there are direct ways to participate in this specific foods, yes.
All right. Well,
Go ahead.
Just shifting gears a little bit of it. Would like to get to your book, Anarcho-Capitalism. In the conclusion of the book, you stated, and I quote, "Throughout history, men have found convenient arguments and mechanisms to suppress freedom, and the trail of history is both bloodied and atrophied due to that suppression," end of quote. Well, I would suggest that an excuse to go off the gold standard back in 1971, there was an excuse there. We had to finance, or some people thought we had to finance a war in Vietnam, and we had to finance socialism. We couldn't afford it, or we couldn't tax people enough and keep their votes without finding some other way to finance these government activities. Johnson's Great Society and the Vietnam War, and so 1971, as gold was leaving the United States coffers, President Nixon unilaterally just decided the rest of the world is going to have to take our dollars without gold, and nothing behind it. So given the precarious financial condition of the United States and its allies that we find ourselves in today, and then endless effort to just spend. Well, there's no limit to the amount they want to spend. How many trillions? 33 we've got so far on our that we are indebted to in the United States, that to fund endless wars as we try to keep our empire going. And well, how do you think this is all going to play out? And to what extent do you think things might have been different if Mr. Nixon hadn't separated gold from the dollar?
Oh, if he didn't, somebody else would have. Remember, he was a quote conservative Republican. So anyway, those definitions don't mean too much. Trump was also an advocate of zero interest rates and print. He
exactly.
He pounded the table, and So I mean, it's not a Republican or Democrat side. Although recently, some of the talk by some of the Republicans to abolish income tax even. At least the idea got planted, okay? I suspect that in the turbulence we're going to see this coming year, and I'm not an advocate of this or that, please don't quote me on this, but
Sure.
that the fragmentation and the pain that people are feeling economically will feel. It's going to cause some wave effects that might just be sort of terms that are only just now being used, like no income tax, go to sales tax. In fact, that was suggested by, I think, Stephen Moore under Trump, that maybe that's an alternative. The dysfunctionality of the IRS. Well, if they can't function and collect the taxes, especially during hard times, let's say, where people simply can't file. They don't file because they don't have the money, where those percentages go haywire. Then even people who like the IRS will say, hey, it's dysfunctional. It's not collecting the money. We need an alternative. So I could easily see a reversion, not a reversion, but go to the sales tax notion, where every shopkeeper in the country is a tax collector, in effect. I could easily see that. All kinds of things that you might not expect to happen could pop up, I think, in 2023, especially at the point at which the stock market tanks through this year's lows. Now, right now, it's spent since June that many months flip-flopping sideways, especially the NASDAQ 100, barely getting off the June low. In fact, if you look where the NASDAQ 100 is right now compared to the June low, it's almost barely unchanged from that low. Despite all this effort to hold, if it fails, I think the next downturn will psychologically and monetarily be a big event in terms of now. And then again, there's the problem of what if there's another commodity boom going on at that time? What is the Fed going to do? And that's when the Fed's credibility goes out the window. And if you ever lose credibility in the Fed, then that belief structure is gone as well. In other words, you can't fight the Fed. All kinds of belief structures could get fractured here, as they should, because they're unjustified belief structures. And so I think reality is about to bring the fist down on a whole lot of things, and many and varied things that we aren't even part of conversation right now. And it wouldn't shock me that a lot of the terms pop up in 2023. Terms we don't expect to hear.
When you try to fool Mother Nature forever, it can last for quite a while, maybe. I mean, you've always been sort of a believer in the natural law, things that are going. You try to fool Mother Nature beyond a certain length of time, and Mother Nature's going to win ultimately, right? And so, your thoughts, but it took a long time. The USSR was, from 1917 to what was 70 years or so. You can be in prison.
One human lifetime, and it fell apart.
Right.
No, my book is based on the philosophical integration of Ayn Rand's philosophy, absent her politics, which was limited government, founding father type politics. And instead I supplant it with Dr. Murray Rothbard's libertarian political views, and I put them together. But in part 3 of Atlas Shrugged, part 3, that's when the world comes apart, where all the years of error that have been compounded with various wave effects, personal, governmental, corporate, and so forth, suddenly are revealed, and the whole world comes apart. Now, it's a healing process. I mean, sometimes things that are bad should fail. They should fail badly. That's one way you get rid of them, just like the Soviet Union. It didn't last
self-destructive.
Long. It was dysfunctional. And I think that's where we're sitting now, with all kinds of forces at play that can bring that about. That's all.
Well, it could be a very uncomfortable year ahead of us, I suppose, Michael, but we'll look forward to hearing your words of wisdom going forward. And thank you so much again for being with us today, and we look forward to talking to you in a couple of weeks from now. Again, thank you so much for being with us.
Look forward to it, Jay. Thank you.
Thank you so much. All right.